Tired of feeling like your entire paycheck vanishes before the month even begins? You are not alone in the paycheck-to-paycheck grind, watching the cost of living rise while your bank account struggles to keep pace. According to recent data from national economic surveys, a staggering majority of households operate with zero financial margin, making the dream of passive income feel like an exclusive club reserved for the ultra-wealthy. It is easy to look at the rising prices of groceries, housing, and transportation and conclude that getting ahead is mathematically impossible without a massive salary increase. But building lasting wealth does not require a six-figure salary, an inheritance, or a sudden windfall. There is a clear, actionable blueprint for escaping that cycle of financial anxiety, proving that everyday people can achieve true financial freedom. The secret lies in a methodical, disciplined approach to managing exactly what you earn right now, and letting those carefully managed earnings generate a secondary, unstoppable income stream for you. Consider the remarkable journey of the Miller family. Over 2 decades ago, they faced a reality many of us know all too well: raising children and managing a busy household entirely on a single, average income. Every single dollar was spoken for, the margins were razor thin, and the idea to invest in stocks felt like a luxury they simply could not afford. Yet, from that very modest starting point, they built a formidable income-producing portfolio entirely from scratch. Their transformation began not with a hot stock tip, but with a rigorous budgeting system. The Millers realized that without actively tracking their cash flow, their money would continue to control them, dictating their choices rather than serving their goals. They sat down at their kitchen table, gathered every receipt and bank statement, and categorized every single expense, ruthlessly separating their true, non-negotiable needs from fleeting, impulsive wants. This meticulous tracking revealed hidden leaks in their spending. By cutting out forgotten subscriptions, optimizing their grocery runs with strict meal planning, and drastically reducing how often they dined out, they engineered a small, consistent gap between their single income and their living expenses. They adopted a zero-based budget, giving every single dollar a specific job before the month even started, ensuring that their newly discovered surplus was protected from accidental spending. Finding that extra money was an incredible victory, but it was only the first half of the equation. The real question was what they would do with that hard-won surplus to ensure they would never have to worry about financial insecurity again. They needed a vehicle that would multiply their efforts, and the answer lay in a simple concept that would become the engine of their entire financial future. They turned their undivided attention to dividend investing. A dividend is simply a portion of a company's profit that is paid out regularly to its shareholders as a reward for their investment. When you own shares in dividend-paying companies, you are essentially acting as a silent partner, receiving actual cash deposits directly into your brokerage account just for holding the stock. To maximize this new income stream, they harness the incredible power of compound interest. Compound interest is the financial phenomenon where the money your investments earn begins to earn money of its own, creating exponential growth over time. By taking those initial cash dividend payments and immediately using them to buy even more shares of stock, the Millers created a self-feeding, automated loop of wealth creation. With their newly minted budgeting system freeing up roughly $200 a month, they took action by opening a standard brokerage account and an IRA. An IRA, or individual retirement account, offers specific tax advantages that allow investments to grow much more efficiently over long periods. They started small, buying fractional shares of established blue-chip companies with long, proven histories of paying and consistently growing their dividends year after year. The initial financial results were incredibly modest, testing their resolve. Their very first quarterly dividend payments amounted to just a few dollars, barely enough to buy a cup of coffee at a local diner. But the Millers meticulously tracked this progress on a spreadsheet, creating what they affectionately called their dividend watch. Seeing those tiny cash deposits land in their account provided a massive psychological victory, proving that the system actually worked and that they were finally paying themselves first. Of course, the journey over 2 decades was not a smooth, uninterrupted upward line. The stock market is inherently volatile, moving through dramatic cycles of booming optimism and crushing pessimism. The Millers had to navigate major economic downturns, watching the on-paper value of their portfolio plummet during times of intense global financial stress. During one particularly severe recession, the daily news headlines screamed of impending financial ruin, and the emotional temptation to sell their stocks and retreat to the perceived safety of cash was overwhelming. Many of their peers panicked, liquidating their portfolios and locking in massive, permanent losses. The single income that supported the Miller family felt more vulnerable than ever, deeply testing the very foundation of their financial discipline. But they leaned back on the core mechanics of their strategy, refusing to let fear dictate their actions. Because they were focused on the actual income their portfolio generated rather than the daily price fluctuations of the stocks, they saw the market crash as a rare, generational opportunity. Their monthly budget surplus could now buy shares at a steep discount, meaning their money secured even higher dividend yields for the future. When the economy eventually recovered, the magic of compounding was in full, undeniable effect. Those reinvested dividends, bought at rock-bottom prices, began to snowball rapidly, accelerating their portfolio's growth far beyond their initial projections. The few dollars a quarter grew into $50 a month, then $100, and eventually several $100s of passive income flowing in like absolute clockwork. As their portfolio swelled in size and value, a new critical challenge emerged on their horizon. How could they fiercely protect these hard-won gains while ensuring the income stream continued to grow fast enough to eventually replace their primary paycheck? The solution required a more sophisticated, strategic approach to how they arranged their investments. They began to focus heavily on the vital concept of asset allocation. Asset allocation is the strategy of dividing your investment portfolio across different asset categories, like stocks, bonds, and cash, to carefully balance risk and reward according to your specific timeline. They realized that holding a concentrated portfolio of individual stocks carried specific outsized risks if even one major company suddenly cut its dividend. To immediately mitigate this risk, they shifted a significant portion of their ongoing savings into a dividend ETF. An ETF, or exchange-traded fund, is a broad basket of securities that you can easily buy or sell through a brokerage firm on a major stock exchange. By purchasing a single dividend ETF, the Millers instantly diversified their holdings across dozens of highly reliable, dividend-paying companies, dramatically lowering their overall risk profile without sacrificing yield. This crucial evolution in their strategy brought a profound, lasting sense of peace to the household. The gnawing anxiety of relying solely on a single income began to completely evaporate. They were no longer just working tirelessly for money. Their money was now working tirelessly for them, taking no days off, requiring no sick leave, and silently building an impenetrable financial fortress around their family. Year after year, the meticulously updated Dividend Watch told a story of breathtaking exponential acceleration. The quiet hum of dividends continued in the background of their lives, eventually crossing a massive, life-altering psychological threshold. Their passive income grew large enough to completely cover their basic utility bills. Then it expanded to cover their monthly groceries. And finally, it miraculously surpassed their entire monthly mortgage payment. This is the true, unvarnished definition of financial independence. It is the exact point where your accumulated investments generate enough consistent cash flow to fully sustain your chosen lifestyle, making traditional employment entirely optional. The Millers had engineered their own absolute freedom, not through a winning lottery ticket or a lucky speculative gamble, but through relentless, unyielding consistency over 2 decades. The profound impact of this journey extends far beyond their own well-deserved retirement security. By building substantial wealth from scratch, they fundamentally changed the trajectory of their family tree. They demonstrated to their children the tangible, life-changing rewards of delayed gratification, the absolute necessity of a strict budgeting system, and the awe-inspiring mathematical reality of long-term dividend investing. Looking at the broader, often turbulent economic landscape today, the foundational principles the Millers utilized are more relevant and necessary than ever before. Inflation continues to quietly erode our purchasing power, and traditional guaranteed pension plans are largely a relic of the past. The heavy responsibility for securing our financial futures now rests squarely and unavoidably on our own shoulders. But as the Miller family proved, the barrier to entry for building real wealth has absolutely never been lower. You do not need a massive executive-level salary to start changing your life today. You simply need a budget that forcefully creates a gap between your income and your expenses, and you need the unwavering discipline to direct that gap into high-quality income-producing assets. You can start this very week by conducting a ruthless audit of your own cash flow. Identify just one recurring, unnecessary expense you can permanently eliminate and redirect that exact dollar amount directly into a brokerage account. Buy your very first fractional share of a reliable dividend ETF, set your account settings to automatically reinvest the payouts, and proudly start your very own dividend watch. The early days of this process will undoubtedly require immense patience and mental fortitude. The financial growth will feel agonizingly slow at first, just as it did for the Miller family when they were celebrating a few dollars a quarter. But if you maintain your laser focus and implicitly trust the proven mathematics of compounding, time will eventually step in and do the heaviest lifting for you. Every single dollar you choose to invest today buys you a tiny permanent slice of your future freedom and autonomy. It is undeniably a long game, demanding short-term sacrifice and a stubborn refusal to succumb to the toxic instant gratification culture that keeps so many intelligent people permanently trapped in the exhausting paycheck-to-paycheck cycle. You possess the inherent power to write your own definitive story of financial independence. The educational tools are readily available, the investment strategy is historically proven, and the final outcome is entirely dependent on your personal willingness to simply begin. Take absolute control of your income, put your hard-earned money to work, and watch your lasting wealth grow, one intelligent decision at a time.